Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we are talking about one of the premier investment banks in the world, Goldman Sachs. I think that you'll enjoy the information that we're going to talk to you about today. Now, if you look on the screen, you're going to see Goldman Sachs listed, or I put it up there, but also I put a icon up there with a lot of other symbols around it. All of these are different dollar signs from or currency signs. Yes, there's a dollar sign there from the US, but let me ask you a question. How many of those currency signs can you recognize? Put them in the comments today if you do. I had to look a few of them up, but there's one in particular that has a impact on Goldman Sachs. And that is this one here. I'm going to show you the cursor. See the RM? The ringgit, which is the Malaysian currency. And we're going to talk about that just a little bit because that country has a big effect on Goldman Sachs. So let's go ahead and begin with the daily stock analysis. Okay, as I begin every day, I want to remind you that what I do on a normal day is I work in the mornings as a financial planner and I work in the afternoons for you because I do my research in the afternoon for the broadcast that I do for you. But if you want to learn more about my financial planning practice on how I help people to prepare and get ready for retirement, how to reduce the frustration of their finances, go over to richardsfinancialplanning.com and you can learn more about that. Okay, we're going to begin and we're going to talk just a little bit about the details of Goldman Sachs. Now, the video that I've prepared for you today is basically going to give you a snapshot of their finances within about 30 seconds. So let's watch this together and learn a little bit. Goldman Sachs at $78 billion. Actually, it's a little bit less than that. It was up most of the day during the market, but it just couldn't hold on to it. It's down to around 77 point something right now. But for most of the day, it was up. Goldman Sachs is, in being a bank right now, it's considered a value stock. And we're going to talk a little bit more about value versus growth in a few moments. But I want to focus on the earnings of the company right now. Let me go forward and look at this because this is the way that we look at stocks every day. We look at the stability, we look at the earnings, and we also look at the competitiveness. Now, we try to identify the moat. Do you remember what a moat is? This is the Warren Buffett philosophy of looking for an advantage in investing. This is a moat. Now, remember that moat is that imaginary barrier that's between a company and its competitors. So what's the barrier that's out there right now in between Goldman Sachs and its competitors? Well, the biggest thing is going to be its name. It's an underwriting brand name that if you are going to take a company public, Goldman Sachs is going to be right there on top as far as a consideration of a company that's going to help you to take your company public. In a way, it has the network effect, and the network effect is really thought of with internet and social media, but it also has to do with the fact that the more people that use a brand, the more people that use a brand. And what that means is that if XYZ company that's extremely popular and successful has used Goldman Sachs as an underwriter for its public offering, then you probably want to do the same thing if you're taking a company public too. So they have a good reputation for underwriting companies. They also have a very good reputation for bond underwriting as well. Now, One of the things now, yes, we're talking about the stability. Remember, that's the S of the SEC, the philosophy that I utilize in analyzing stocks. One of the biggest advantages that a banking stock has is that it is monitored by the government, not just really the United States government, especially when we're talking about Goldman Sachs, because Goldman Sachs has such a diversified round of business. But if you are doing business in the United States as a bank, you have a lot of government regulations that you have to deal with. You have stress tests, you have the Federal Reserve, you have the Dodd-Frank, you have a lot of other different things that are out there. And that really gives a little bit of security to the business in itself. Now, this is a recap of the revenue mix that Goldman Sachs has. And the 42% is really the big thing that I think you need to focus on today, because this sets Goldman Sachs apart from many of its peers. It's just not their underwriting, it's the fact that they have a large part of their business is in global markets. Now, let's look and see actually what happened in the reports. Now, in the past quarter, it was reported in 2020 in the third quarter that they had $10.78 billion in revenues. Now, remember that $10.78 billion is going to be a number that you want to know something about in just a few moments. It was 30% higher than the third quarter of 2019. However, it was 19% lower than the second quarter. The second quarter was reported as being a banner quarter, one of those that you can't that you can't repeat all of the time. Now, the financial targets that Goldman Sachs has put forward is that they're looking to have returns that are greater than 13%, and the return on tangible equity should be 14%. Now, if you go to a research house like Morningstar, this is actually what Morningstar is saying about that. They're saying that Goldman is being a little bit ambitious. Their return should probably not be greater than 11.5%, and the return on tangible equity probably won't be any greater than 12.5%. Now, anytime that I put rates of return up there, I have to emphasize that this is not a guarantee, and the past performance of a company, no matter what it is, can't be a guarantee going toward the future. So let's look at the earnings, because we've talked about the stability, the things that make this a stable company. What about the earnings? The earnings are actually pretty stable too. The blue line, the solid blue line, is going to be the actual earnings per share that were paid. And I went back to 2014 to show you everything here. And Goldman is actually projecting very ambitiously into the next quarter too. So we want to see how that happens. But remember, sometimes great ambitions sometimes come with a little frustration too. Here is the big fly in the ointment that could hurt Goldman Sachs going forward. And that is Goldman Sachs has had to pay $2.8 billion in a settlement of the Malaysian government fraud case that's been happening over a couple of years now. This article that is from the Wall Street Journal is actually projecting that they think that the total cost to Goldman is going to be around $5 billion. Now, a moment ago, I told you that their earnings for the year was 78, around a little bit over $10 billion. Well, it's a good possibility that you could see in a forward year that up to half or 2/3 of the earnings from a year could be sacrificed for the penalties. Now, will that hurt Goldman in the long run? It may take a few years for them to bounce back from a return standpoint, but as far as doing business, they have such a good reputation that it's not going to hurt them as much as perhaps the problem that Wells Fargo had with its customer base. It's a lot different. The Wells Fargo problem that really occurred basically because of fraudulent accounts that were being opened for their general customer base. The problem that occurred with Goldman was a couple of executives that were dealing with the international business with the Malaysian government admitted to fraud. And you can go to the Wall Street Journal and read the article and learn a little bit more about it. But let's look and see really what the bullish investors, what the bullish analysts are saying about Goldman. The biggest thing is that they have a stable management, and higher interest rates in the economy will actually encourage customers to pay higher fees. Now, what's that mean? What that means is we're anticipating that we're going to see interest rates moving up. And when interest rates in the economy move up, what happens is that banks become more profitable. And if the customers are getting higher returns, they're not going to complain about fees as much. So that's actually a bullish aspect going forward for Goldman. The other thing is that management is very adaptable to regulation changes. If we have a change in government regulations, which may happen if we have more of a democratic government going into the next year, if there's more regulation, there may be some adapting that needs to be done from the banking side. And actually, Goldman's really pretty good at that. That's what most of the analysts are saying right now. The other thing is Goldman has restructured its business in the past, and they're ahead of the curve when it comes to doing business in all the different areas that they do. And that's a bullish aspect of Goldman, and it could play to their benefit. Now, what are the bears saying? What are the bearish analysts saying going forward? Of course, they're looking at the penalty from the NDB. That's the Malaysian scandal that has this weighing over top of Goldman. One other thing that you have to look at is that the guidance that Goldman has put forward is very ambitious, but I think that there's enough temperance in there from the market, from the analysts, that they see that there may be a little bit less than what is anticipated, basically because of the COVID-19 virus impact on their earnings. The other thing is that Goldman, in its diversification of business, the market in itself, when I say the market, I'm saying investors in general, are slow to recognize the advantages that Goldman has over top of some of its competitors. If you go back and look at those 4 different areas of emphasis for the company, the segments of the company, and if you compare that, let's say, for example, if you compare it to Wells Fargo really doesn't have as much of a global influence. Some people might say that that's an advantage. Some people might say that it's a disadvantage. The bearish investors are saying that it will be an advantage, but the market's not going to recognize that quite as much. Now, when we look at what some of the analysts are saying, this is Morningstar's opinion. The current value of the stock is around $224.30 a share. They're saying that the value of it is $238 a share. So in Morningstar's opinion, this stock is really selling at about a 5.76% discount. Now, when we look at what analysts in general are saying about this company and its stock, with 14 analysts that are following it, 10 of them are saying that this company is a strong. They're saying that Goldman's a strong buy, and we're having 4 of them that are saying, yeah, we're saying, I can't help it but hit the button sometimes. Okay, they're saying that it's a hold. In general, though, it's going to be a strong buy going forward for most of the analysts. Now, let's take a look at the history and how they compete. Of course, remember, we talk about the SEC, the stability, the earnings, and the competitiveness. How competitive is Goldman in relation to other companies? Goldman, if you look at the spaghetti graph that's in front of you, you're going to see that Goldman is in the blue, and it's right below the gold line. We'll find out what that is in just a moment. Bank of America really is on the bottom at this point when we're looking at these companies in itself. Now, I didn't put Wells Fargo in here. I know that, Pedro, you asked about Wells Fargo in comparison to Goldman. I didn't put it in there because Goldman is more diversified, so we wanted to look at more global diversified banks. However, if I were to put Wells Fargo in here, it would be down here below the others in it that's on the spaghetti graph. Now, the gold line that you see, That's Deutsche Bank. And that growth has actually earned it the banner of being a growth stock, even though that it's a bank. Credit Suisse is the blue line. And then the red one is Sumitomo Mitsui. And what I'm putting up here right now is the valuation of these particular stocks. Now, this is really important because if you are trying to have a diversified portfolio, you are trying to have value and growth stocks. And if you're trying to, well, let's use this word, if you're trying to game the economy, you hear a lot about the way that the economy is shifting from growth stocks to value. And a lot of people are saying that you should move more to value. In my opinion, if you're trying to get more stability in your portfolio, you need to have a little bit of both. And I'm going to show you exactly what I mean here in a moment. But what I want to do is point out that Goldman Sachs and Bank of America are both considered large value stocks. Deutsche Bank and Credit Suisse are considered value growth stocks. They're a blend. They're not quite there. But Sumitomo, I can't say that. Sumitomo Mitsui is considered a large value, just like Goldman Sachs and Bank of America as well. Now, I wanted to show you yesterday what I showed you is I showed you a model of an aggressive portfolio. And this is actually a moderately aggressive portfolio. Not real conservative, not real aggressive. The reason is it's got a variety of different stocks that's in it. I'm not going to spend a lot of time and show it because you can freeze the frame and go back and watch the video a little bit more. But I wanted to point out if you're trying to reduce your risk, you don't want to have all of it in stocks, then you might want to have other different assets like cash and intermediate bonds and short-term bonds. You will also, if you're trying to take advantage of the value shift in the economy, you may want to look at putting value stocks along with keeping some large cap growth stocks as well, including small cap stocks, international developed stocks, and international emerging stocks. And we're going to pick some of those in future days and talk about them just a little bit. But this concept it's put together based on the modern portfolio theory. The modern portfolio theory is I'm not to get too geeky on you, but it's a theory that won a Nobel Prize that's been developed by Harry Markowitz and Bill Sharp. But that'll help you just a little bit. Let's go back and look, if we're talking about the stability and the potential for Goldman Sachs, let's look and see what's happened to the value of the past year. A year ago, Goldman Sachs was selling for $214.52. Today, it closed at $224.30. So over a period of a year, it's really only had a 4.56% return. Now, that's just the value. Remember, this is a dividend stock, so it does pay dividends as well. Anytime that I put anything up here as far as a return, I always emphasize that the past performance is not going to be a guarantee of the future results. Let's hope so when we look at the 3-year return, because the 3-year return is kind of dismal if you were holding on to this stock for 3 years. 3 years ago, it was selling for $225.15. Of course, it's had a 0% return because today it closed at $224.30, just a few cents off of where it was 3 years ago. So let's hope that it continues to go forward and do well. But one of the good things about banking stocks is this: most banking stocks pay dividends, and dividends are a good thing. They're paying a 2.23% dividend, and actually really pretty good. Now let's wrap things up here by looking and seeing what some of the other analysts are saying about Goldman Sachs and their stock. Remember, it closed around 224 today. Now, the most pessimistic analyst is from Morgan Stanley. They're putting a range on this stock between 192 and 208, and they're having an equal weighting call on it. The most optimistic analyst is Oppenheimer. Gosh, remember, okay, it's a $224 stock. They're saying that it has a potential for 326 to 356. That's really, really high. Now, generally speaking, most of the analysts out there are saying that this is a buy. There's a couple of them that you can see there are a hold. I didn't put all the analysts up here because it's just too much. What I did is I went and looked at what analysts rated this stock over the last month. I feel that those companies, those analysts probably have the best handle on everything. They're giving you the best view of what this stock may do going forward. So in general, when we look at Goldman Sachs, it's a banking stock. It's a fairly conservative stock. It's probably not going to go out of business. And I say that tongue in cheek because they're a very stable company. If you look at what most of the analysts are saying, most of the analysts are saying that it's a buy. Okay. So you need to make your decisions, obviously, based on your financial situation. I want to thank you all for watching today. And Pedro, thanks for asking about Goldman Sachs. If you, one of the viewers out there, have a stock that you'd like me to review, put it into the comments and let me know about it. I would love to look up some of the information. Now, I can't do all of them. Let me tell you the way this works. I use information from other research houses like Zacks, Dow Jones, Morningstar, and I culminate that all into the report that I do and try to give it to you in about 15 or 20 minutes. It's a very short synopsis. I can't do all stocks because all the information is not available on all stocks, but I'll do my best to help you out. I want to bring forward stocks that I really think are significant, like we talked about Disney yesterday. Go back and look at some of the other videos that are listed. There's close to 100 of them now. So with that, I want to say thank you very much for listening and let me hear from you. Have a great day and stay tuned for the disclosure.